Brazil's central bank raised its 2014 inflation forecast as a severe drought in southern Brazil damaged crops and caused a rise in food prices. I'm joined by Ariane Vasquez, a senior emerging markets economist at Oxford Economics in New York. So Ariane, is your inflation outlook in line with the central bank's new estimate?
Yes, it's pretty much in line with the central bank's latest upward revision. We're currently projecting a 6% inflation target for this year, and we are thinking there may be some slight upside risks to that forecast. But that being said, I think much of the market and our forecasts are pretty much in line with these recent developments in Brazil stemming from the impact of the droughts. Another structural constraints that have systematically kept inflation on the high end in Brazil.
And in order to battle rising inflation, the central bank signals it may actually extend its rate hiking cycle. Now, are you expecting to see a rate hike at its next meeting?
Yes, we are. We are expecting another 25% basis point increase in the target SELIC rate. Thereafter, I think there is a little bit of uncertainty as to how the central bank will move. Obviously, with these increased inflation targets, I think the central bank is trying to strengthen and bolster its credibility. So there probably exists the likelihood of yet another hike. I know in recent declarations, central bank chief Tambini has been trying to really send that message of their continued fight to keep inflation in check. So at this point, while we are looking at the CAPAM committee minutes to give us more insight on how the central bank is going to move in the coming months, I sense at this stage we really can't discount not only a rate hike in April, which is certainly priced in, but thereafter. That being said, I think as we move towards the elections in October, the resolve to continue hiking rates is obviously going to dissipate, because I definitely sense that this is an administration that is very keen on fostering growth at all costs, and more importantly, on not having a rate cycle right in the middle of an election.
Ariane, what are the main trading trends we are witnessing with the Brazilian real, and how did it react to today's data?
Sure. Look, I think the real has been considerably better performed thus far in the past couple of weeks than we saw earlier in the year. I think early in the year, this was a currency that was decimated by all the uncertainties related to the fragile five economies, apprehensions concerning the Fed tapering, worries over a slower Chinese economy. You also had some internal domestic issues that were keeping the Brazilian real considerably lower, but primarily the threat of a downgrade, concerns over their fiscal situation, electoral worries. I think all these issues have really abated in recent months, and that has allowed the real to strengthen. At the end of the day, I think investors have realized that you're still looking at a country with a significant policy arsenal. Not only have they moved to tighten rates in order to keep inflation in check and ensure financial stability, but you're still looking at a country with a deep FX reserve cushion, a country that continues to generate a great degree of foreign direct investment and portfolio inflows. And at the end of the day, you still have a very attractive carry appeal in the real. So as we see greater stabilization in the global financial markets, obviously you're going to see greater stabilization in the real, because at the end of the day, this is one of the more attractive currencies. And I think this trend is likely to continue. We may see some volatilities related to the electoral cycle, but the other issue is, as I mentioned, you still have a very deep policy cushion. The fact that there is a very interventionist program that the central bank has in place in order to smooth out these volatilities. So while we're not expecting a major sustained strengthening in the real, I don't sense we're going to see these wild and volatile swings in the currency that were so evident during the beginning of the year.
The Brazilian government today unveiled an overseas bond issue denominated in euros. Now, this comes just days after the Standard & Poor's downgrade. So what are your thoughts on this?
Look, I think the Standard & Poor grade, the Standard & Poor downgrade was pretty much priced in. And as we saw when they came out with the news, the the markets reacted against the grain. The real strengthened. There wasn't really much change in the interest rate curve. Bond prices, I think, were a little bit firmer. So, to be honest with you, I don't sense the downgrade had much of an impact. I think, Brazil, as I mentioned, is still an attractive play, despite as there's greater stability in the global financial markets. I think you'll see continued migration of wealth, capital, and investor interest towards Brazil, despite the fact that this is a country with noted macroeconomic concerns and potential imbalances, with investors continuing to search for yield in this still very low yield climate. Obviously, Brazil remains a very attractive pick because of the carry trade, and because of just the sheer potential that exists in the country. So, I think the downgrade was a good reminder, probably to the government, that they do need to get their fiscal house in somewhat stronger order. But at the end of the day, when investors still look at Brazil, I think they feel confident enough in the capacity and the deep policy flexibility and maneuverability Brazil has in the current climate.
Thank you very much. Well, viewers, do stay tuned as we have plenty more economic updates heading your way.